Good morning, good afternoon, or good evening. I can tell the future when we're trading stocks, but I can't tell what time you're watching this video. So I welcome you to the week ending April 19th, which is OPEX week preview. And what you got on screen there is the greatest graphic creator of everybody on FinTwit, Earnings Whispers, summary of who is reporting earnings this week. And as we have Goldman Sachs, Charles Schwab, Bank of America, UNH, Johnson & Johnson, Morgan Stanley, United Airlines, Interactive Brokers, ASML, Alcoa, Las Vegas Sands, Abbott, Taiwan Semiconductor. There's nobody of exuberant interest that's reporting this week, other than a very rare and very odd Netflix. It's going to be reporting earnings on Thursday. The reason I mention that is you typically don't get Netflix until the week after all of this junk. This is usually a very quiet week when it comes to earnings. You started Friday with your JP Morgan, Citigroup, couple of other guys. I'll get to that in a couple of minutes. But yeah, that's really what we're at here, and pretty interesting. The Bank of Ozark. Ooh, that was a great show. So Netflix is going to be reporting on Thursday, and I'll bring you in quickly right now to exactly what I suspected. Futures have just opened, and guess what? We are green. We are green on the S&P 4 points, 3 points. We are green on the NQ 11 points. And even the Dow is starting to make some movement to the upside, as well as over here on the Russell 2000. And the reason I mention that is on Friday when, it was the, come on, take your profits, take the trade off. We didn't end as bearish as people were thinking with this whole Iran, Ayatollah, Asahola bullshit. Not at all. Absolutely not at all. Put this back. Restore cells, whatever. Which one is it? Minimize. This is maximize. No, so whatever. I'll just shut it down. Here we are, earnings is coming up this week. Now, more importantly, on Monday, tomorrow being tax day, you got Fed's Logan speaking at 2:30 in the morning, which none of you will be awake for except for Imad. Goldman Sachs reports. Fed Williams speaks. Core retail sales on Monday. And you got the 6-month and the 3-month bill. Fed's daily speaking at night. And then you go into Taco Tuesday with UNH, a huge name that's going to be reporting. And at 9 o'clock in the morning, should be on here. It's not on here. Wow. But it is right up here in your summary. Federal Reserve Chair Jerome Powell is speaking on Tuesday at 1:15 p.m. Eastern Time. It's a fireside chat together with the Bank of, I don't know, but I'm sure it's the Bank of England. And yeah, he's going to be speaking on Tuesday at 1:15, so prepare yourselves for Taco Tuesday. Come into the rest of Tuesday. Oh, yeah, they've got it here. Sorry, my bad. 115 for Jerome Powell. Eurozone CPI coming on Wednesday. Blue, blah, blah. Everybody's focused on Iran. Everybody wants to know about Iran. It's pretty fucking clear by now that, as I stated in the very beginning of the year, that I expect 2 rate hikes while they were discussing 5 rate cuts. You aren't getting any rate cuts anytime soon. And for those that have been around the block a couple of times, you're not getting any rate cuts until you get unemployment up above 4%, at least to that level. And now there's a little bit of a whisper about rate hikes all of a sudden. So go figure that. Bring you over to the SPX. And again, Friday, great day. Boom, 27-point gap down. Wednesday, great day, obviously. Tuesday, Monday, amazing day. Last week, even though we had a really compressed range going into April 4th, incredible. You all remember, 6,900% on those SPX puts. And again, got our close down there below 5,200, which that was what we were expecting. That was why we had the trade on. Started closing below 5,200 towards the end of last week. And again, relative, almost over here, almost got a minus 3% decline. Almost missed it by a point. 5107.94 was our low on Friday. 5106.90, our 3% decline. That's our biggest drop that we have had since Israel went into Gaza on October 27th. And once again, here we are going into the weekend where we're not really oversold. In fact, that's one of the main parts that I continue to talk about during the week. We are not oversold on any time frame anywhere. And here we are straddling above 5,100. Keep you over here on the spreads. Again, supercalifragilisticexpialidocious. Just last week alone, going back over last week, because I've discussed this with a couple of you now in our one-on-one calls over the weekend. Monday, 150%. What 150% represents is that you were collecting $3 credit on a 5-point spread, which is $2 at risk. That 150% there on Monday is $300 profit on one contract. Come into Tuesday, the trade that I strongly suggested taking off because we had $4 credit on the entry and only $1 risk. Got it down there to 250%, got down to $1.50. So you're collecting $250 on your $100 risk. So $200 and $250, another $4 there on that Wednesday, complete full credit. You're now at $950. On Thursday, we played the bullish puts because we were expecting that bounce to take place, which is what we got. $3 credit. So your $950 is now up there. Do your math. Another $3 on top of that. And then here on Friday, only getting $2 credit. So your $500 plus your $950. One contract only. One. Doing your SPX spreads. And you've collected $450 over the course of the week. So those of you that want to compare size while you're pissing in the urinal next to each other, those of you that aren't familiar with trading spreads, don't give two shits about what size you're in. That 1450 there from this previous week, that gives you a little bit of a buffer zone that if you think you got your shit together and that you really feel comfortable with this, you can go on to 2 contracts and do it next week. And if, again, as you've been experiencing, seeing your little one contract and then compounded to the next week into 2 contracts, you're bringing in $2,500 a week, 10 grand a month. Don't see how you can complain to that. QQQ. Go back to the SPX and highlight this as well. 2 red weeks in a row. 2 red weeks in a row. 1.91% down on Friday. 1.25, 3.5. Yeah, boom. Look at these dips. Look at these dips. Yeah, well, look at these dips. This dirty son of a bitch will not break down. 438, 438, 436, 437, 437, 439. We're not getting the breakdown on the QQQ that the market synthesis and all of this fucking Twitter, discussion. You're not getting it. And the reason you're not getting it is because none of these guys are reporting earnings until you get to the end of the month, is where you get your big weight earnings. So it's pretty obvious why it wouldn't break down, but it's been one hell of a fucking trade. There's no question about that. The ones that we traded on Friday, what were they? 100 for next week. Those were up 150%, $2 to $5. So it's a big, broad picture as far as all of that goes. And before we go in, actually, you know what? I'll just take you into the charts. So here we go on to the SPX. And sorry, this is SPY. Here's your SPY. Here's your gap down from Thursday. And that was why I said, for all you guys that are buy the dippers, if you want to get involved in a buy the dip play, this is your play that you're looking at. And that was why it was posted out there on Friday, right around $2. Right over here, this red line, which I'll go ahead and extend for purposes of visual aid, that's your 50-day moving average. We came right down to it, touched that 50-day moving average there on Friday. That, in and of itself, unfortunately, is a little bit of an algorithmic trigger that, hey, guys, okay, you had a little bit too much to drink. Let me call you a taxi. Let me just make sure that you get home safe. Tiny little 3% dip, and here we are at the 50-day moving average. So, yeah, unfortunately, it does look and appear as if we are due to get ourselves at least a little bit of a bounce because, as you saw there over the weekend, Iran is a fucking flock of seagulls with the big fucking poofy hair that goes 19 inches hairsprayed to the fucking left. It's garbage. And that's why futures are reacting the way that they are, because all that it was, hey, I'm going to spit on your shoes. Let me see what you do back to me. So now we're waiting on Israel's response. And perfect scenario, that Israel response will come on Monday night or Monday afternoon, or even better, happen Tuesday, which Taco Tuesdays are significant. Got to update this because it's virtually minus 3%. So leave that with a grain of salt. But again, came down here, filled a gap that was sitting there pending from well back here, middle part of March. Our big gap down here from early into the beginning of March is still unfilled. And this is where your big test takes place. Your big test taking place right around here, 50.96, 50.95. And should we take out that 50.96, 50.55, then we can start celebrating and saying that we are undoubtedly into that long anticipated correction. Look over it from the Elliot wave point of view and Fibonacci extensions I would get talking about last week. You definitely got a 1, your 1 or your A. You definitely got your 2 or your B, and they played out perfectly. Boom, boom, boom. Almost down to the 123, 138 extension, right through the 100. Now, where this extends to on this move, dip down here, you bounce back up. We came right down to the 100 extension. So this could be all of C, A, B, C correction. Boom, boom, boom. We're all finished. It could be our wave 3. We don't know yet. We will know once we start to get the bounce level. And the bounce level is pretty damn clear right here. Your break point would be right there around that 51.46. Should we get that 51.46 bounced, then everybody will start discussing it, but then you start making it a lot easier, and you got your Fibonacci retracements. And where's our Fibonacci retracement going to take? No, that's not it. You're doing it. You're doing it again, Tim. From the big, broad, wide picture of this incredibly large dip, your 38.2 retracement would roughly take you right there to around 51.68. 50 retracement right around that 50.86. So we'll get to that in a little bit because of your VIX. VIX coming up here into the 19s, into the 18s, into the 1811, closing up above 17. This bitch ain't drunk. This motherfucker is on fentanyl. And as bearish as I may want to be, and I may want to discuss how we've got a humongous correction that's coming towards us, this, in my view, and I was discussing it earlier or at the latter part of Friday, this is an overreaction, is all that it is. You've got a major gap here to be filled on Friday, all coming off of that Iran, and more significantly, bring you in. Actually, I will change you off into the default so you can see it a little bit clearer. I may have it, I may not have it. I may have to go back. Yeah, okay, so this is the much bigger view. Much, much bigger view coming up here. I bring you on to my regular VIX chart. And here we are coming into the shorter term, not coming off the COVID lows, the COVID highs onto 2022's highs, but looking here at the shorter term view, and here we are touching this trend line. So again, little bit of caution because for the better part of 2 years, this is where we've been failing. Bring you back out, put you back into that bigger, broader picture. You got a big resistance line up here, and this is coming from your COVID, and we will zoom out so that you can see where all of this comes together. And as you see here, forget about the COVID spike coming off of there. That's your major hey, hello resistance area. And as we had our major hey, hello support level that we started breaking down in April, we're just coming in back inside of that. So trend lines, I'm not a trend line guy. I don't trade trend lines. But the move that you had here on the VIX was very worthy of paying attention to because you are not in Q1 of 2024. You are not in Q4 of 2023. You're in the beginning of Q2, and it's exactly playing out for the moment to appear to be 100% identical to what happened there in 2012. So that leaves you with that. I will stop wasting your time so that you guys can go on and do much better, thrilling things that you enjoy doing rather than learning about how you can be financially free. IWM. Looking here back to February 1 is where I'm at. This is your February lows. And this gap is still sitting there wanting to be traded, wants to get filled. That gap would fill you down just below 194.85. So again, a little bit questionable here on the IWM as to coming down to that, but I will show you the bigger picture when we move on from here and as we close this off. Okay, here we go, Citigroup. So Citigroup, here's a 1 minute chart. And I will bring you over why Citigroup was the alert on Friday. This is my right screen, my right 55-inch TV. Caterpillar, McDonald's, we crushed 5, 6, 7 times during the course of the year. And JP Morgan. JP Morgan was the highlight, was the focus, was the attention. I wanted to get that JP Morgan up here in the 198-200 level so that we could go and get short. JP Morgan shit the bed off of their earnings. So unfortunately, didn't have a trade. Right next to it is my Citigroup. Next to that, Goldman Sachs. Next to that, KRE. Next to that, the famous MRNI. But more importantly here is the Citigroup. And that's what I want to get on to is as what happened there on Friday, after they report their earnings, everything comes out, boom, boom, boom. I'm seeing JP Morgan sell down. I'm seeing Goldman Sachs sell down. Markets taking a dip. And then here, right into the opening bell, there's this big spike over here on Citigroup. I got no choice. I got to take the trade. Have no choice. And although many of you were unprepared for it because obviously you were looking for JP Morgan, I sent out the email there. JP Morgan, or sorry, Citigroup, May 17th, 60 puts, $5. Put the alert over there in the alert room, put it in the trade room. I got messages at the end of the day there on Friday from 8 or 9 people saying they took the trade off. They made 50%, 80%, even though they didn't get as great of an entry as I did. But for those of you that missed Citigroup, now you have the ability to have looked at it, seen it, paid attention to it, and we got that nice dip down here to this significant 58.82. Pretty good. But again, from a bigger, broader, wider view, and as you can see right here, your big spike high coming back here into January when we initially traded it, and then got our move down into February. Sorry, it was right here. This is your earnings trade over here after we had the decline into January, and we bottomed there right at 50.59. I'd like to see, and I think that we have adequate amount of time on these contracts, that a breakdown below that 58.82, we're more than likely going to be seeing a visit down to 55.55. So that's what I'm seeing there on Citigroup. I'll leave it at that. Netflix is the big name that's going to be reporting earnings this week, and this is your Netflix gaps, significant gaps. There's another gap up here. Okay, fine. This is your Netflix coming off of its last earnings this is your October earnings, and this is your other earnings gap. And Netflix has just been on fucking fire. And when you've got stocks like McDonald's talking about, okay, we're going to proceed with caution here because the low-end user has pretty much used up all of their money. So we're not expecting to get those cheap Charlies anymore for customers. How in the fuck is Netflix being able to sustain itself? People are still over here watching fucking Netflix, spending the money on their increased subscription levels. Can't answer that question for you. I don't like Netflix. I don't watch Netflix. I have nothing to do with Netflix. But look at it from a big, broad, wide view. The motherfucker has almost fucking retraced its entire fucking drop from over here in 2022. And we're not talking about a tiny drop. This motherfucker dropped 75%. And here we are bouncing on Netflix. So you've got your report coming out on Netflix this week. No, I don't enjoy trading prior to earnings. Absolutely not. So Netflix will be reporting on Thursday. If there's anything to be traded, it'll be traded on Friday. So I'll leave you here with the QQQ. The QQQ coming here off of February 1. You're not getting that breakdown below 435. And personal opinion, personal view of this, that breakdown below 435 should not occur until the end of the month when major earnings report. And that all depends significantly on what takes place between this week and next week, because where you're at in life, so that you know, in case you didn't, the full moon is on April 23. So this window of weakness, or the weakness window that we went into with the new moon being there on April the 8th, this window of weakness that we have entered into on the S&P, on the QQQ, on the Russell, very opportune time now to have completely ended it and now start to proceed with a move recovery into April 23. The week after April 23 is when all your major names report. And come over and look at this from a grandpa point of view. And you're looking at the Dow. The Dow has broken on the daily below the Ichimoku cloud. That's a major sign of weakness. However, it hasn't really broken down below this prior resistance area of around 37,700, 37,800, 37,900. 38,000 being your big low over here going into February. You're right on the tipping point of it. So very nice move. Excellent correction that you wound up getting there on the Dow, but that's it. That's all that's taken place over here. You are starting to get bearish confirmations. RSI over here on the daily, not yet down there significantly to being oversold, but you are starting to get some major movement to the downside as far as from a technical point of view. Come over here on daily SPX, as bearish as you might be on the RSI, as close as you might be getting to a proper convergence and bearish signal, we're still, as I've shared on the important chart, doing absolutely nothing. Come over onto your NASDAQ, the NDX. And again, this is why you can see it, having looked at your QQQ chart, and you come over here and you see, and you are dead flat, doing nothing whatsoever on the NASDAQ, and should not be doing anything on the NASDAQ until we start getting into earnings at the end of the month. And you come over onto the IWM, and the IWM and its zigzaggy float up here into that 212 area. Well, now you're starting to break down and touching the lower end of that Ichimoku cloud, which, again, looking at your IWM chart and understanding what we've got, RSI undoubtedly bearish and not oversold. We are going to need to see IWM break down below that 195 area and push into this old candle from back here in December, right around the 192, 190 area, which would then bring it down to being oversold. So then I leave you off here with the VIX. And as bullish as you may think the VIX is an animal that you want absolutely nothing to do with in terms of trying to understand it from a rational point of view. The VIX moves when people like myself start telling you about extreme levels to be looking out for, down at certain levels, up at certain levels, breaking certain levels. Right now, we're in euphoria land as far as it comes to the VIX. We are up at levels that are super exceeding anything without a major catalyst. And as you saw over there from Iran and Israel this weekend, we don't have any major catalyst. So I'd undoubtedly expect the VIX to be retracing back here into the 17s, test the 1622. Obviously, a very big gap to be filled over there on Friday, bring us down around into that 15 level. And that in and of itself would allow for the opportunity for SPY and the SPX to attempt to accomplish a move back into this unfilled gap from there on Thursday. So that's what I leave you with. I will have your email out later on Monday morning prior to the open, after everybody has opened up. And as you see here on the futures, not necessarily calling that oversold over on the hourly as we sold down there prior to the open on Friday. But here we are up. My eyes are fucking shit. 13 points on the ES. We are up 32 points over on the NASDAQ. And more importantly, it's April 14th. So don't forget to pay your taxes tomorrow if you haven't paid them already. And when you do, write a very nice note in there to your favorite agency to go fuck themselves, because you're going to be financially free in the near term. Happy Sunday. See you guys in the chat room. Thank you, all of you first timers that did one-on-one calls with me over the weekend. I have zero complaints about any of them, and I look forward to helping to build those strategies that we talked about.